Hello everyone, I'm going to start with a new concept called profit prior to incorporation. Incorporation means we are going to register the companies with ROC. ROC means Register of Company. In the respective state where you are going to start, there you are going to register the company. So let's see the meaning profit prior to incorporations, which means literally if you translate means the profit earned before the incorporation, which means registration. So a company comes into existence after its incorporation. So incorporation is the first step in the establishing a company. The founders of a company need to keep certain preliminary documents ready before going for its registrations. So for all these registration activities we are going to incur certain expenditure, isn't it? So here now I'm not yet started the business, I'm not in the position to earn the revenue, but I'm incurring certain expenditures, maybe registration fees, kind of transportations, application fees paid while giving the while starting the companies. These are the certain things we are going to occur. This is for the company which is newly started. We have another case which we are going to purchase the existing company. So when we are going to purchase the existing company, that time also we are going to recalculate the assets and liabilities. I am going to calculate before purchasing the company and after purchasing the company, what are the expenditures we are going to incur and how we are going to treat those expenses and incomes in our company. That is how we are going to calculate here. So we have two cases, one at the time of acquiring the company, another one at the time of starting a new company. These are the two situations when we are going to calculate profit prior to incorporations. So incorporation means a registration. Before commencing my business, what are the expenditures and incomes I have earned, how I am going to calculate it. So the period before incorporation is pre-incorporation period of the company, and period after its incorporation is called post incorporation period. So it's very simple and easy concept. Okay, so next heading, steps to determine pre-incorporation profit of a company. So step 1, prepare a trading account for whole accounting period. Yes, we might purchase a company at the middle of the month. For example, during September month you are going to purchase a existing company. So what I'm going to do, I'm going to recalculate all the expenditures and income of the company from my incorporation period. So for whole accounting period from 1st April to 31st March, I'm going to calculate. I'm going to divide 1st April to September is my pre-incorporation period, and September to March is my post-incorporation period. This is how I'm going to calculate. So for whole year I'm going to calculate. After calculating for full year, I will divide the amount, how much is for pre-incorporation and post-incorporation. Next, calculate time ratio and sales ratio, isn't it? So how I'm going to bifurcate the expenditures on the or the incomes given in the questions means, so we are going to apportion the expenditures on the basis of a ratio of called time ratio and sales ratio. So time ratio means a date of incorporation we are going to calculate. Based on date of incorporation we will calculate time ratio. Sales ratio nothing but turnover of the company. So before pre-incorporation how much sales were there, and post-incorporation how much sales are there, we are going to determine and calculate it. So based on sales turnover, these are the major expenses we are going to apportion. Sometimes in question they might not give you the prescribed details of the ratios. So we have to assume that so these expenditures will comes under sales and these many expenditures will comes under time ratio. So we ourselves we have to identify. So gross profit, sales expenditures, advertisement, carriage outward, godown rent, discount allowed, salesman salary, commission to salesmen, promotion expenditure for sales, distributions, free sem. See, all the expenditures are whole and soul related to sales, isn't it? So that's why we are going to calculate it on sales ratio or turnover ratio. So next, list of expenses allocated on the basis of time. Office and administration expenditures, salary to staff, rent, rate and taxes, depreciation of assets, isn't it? These things are paid on monthly basis or yearly basis, isn't it? So that's why we are calculating on time ratio. Printing, stationery, insurance, we are going to pay the insurance on quarterly or half yearly basis, isn't it? Sometimes we are paying monthly also. Miscellaneous expenses, traveling, interest on debentures, general expenses. Here audit fees. In certain times we are going to calculate audit fees in time ratio. Sometimes we are going to fully allot the audit fees to the post incorporation period. While calculating the problems, I'll explain you very clearly. So these are the major expenditures that we are going to allocate on the basis of time. So apart from this, we have some other expenditures so which we are going to calculate. So on actual pre-incorporation, actual post incorporations. So why I am writing this means, see, not only on the basis of time and sales ratio, certain things are whole and solely related to pre-incorporation and post-incorporation. For example, in pre-incorporation, we have vendor salary or proprietor salary, these are the things which we are going to pay to the we are going to whole and solely apportion in the pre-incorporation column. Okay, in post-incorporation, discount on issue of shares or we can say directors fees, sometimes audit fee, commission paid to directors. There are so many things which are whole and solely related to post incorporation. So based on these things we are going to calculate. Not only on the time and sales ratio, we calculate the apportionment on the basis of pre-incorporation and post-incorporation based on the expenditure's nature. We can't blindly transfer certain things to pre-incorporation and post-incorporation. There should be a nature of expenditure which is whole and solely related to the concepts. Okay, so I'll just rough diagram for the format, very easy. So calculation heading as usual, calculation of profit prior to incorporation. Profit, you can write calculation of profit prior incorporation. In this, the table is very easy. don't think I'm just drawing a line and all. Okay, it's a format where you can understand the things very easily. So this is particular. So in after particular you are going to mention a ratio, then we'll write total. Here we are going to apportion the pre-incorporation's value. Next, post-incorporation values. In particular, first we will identify income. So what are the revenues we have earned? So we'll consider that as a total A. Next, we'll calculate all the expenses. That will be total B. So for example, income are identified in the sales ratio. So I'm going to write the total here. Just I'll give you rough figure. 1 lakh. Okay, this 1 lakh is apportioned in the basis of sales ratio. Sales ratio is for example 6:4. So 60,000 in pre-incorporation, 40,000 in the post-incorporation. 1 lakh into 6 divided by 10. So this is how we will calculate. For post-incorporation, for example, total expenditures are 60,000. This 60,000 is apportioned in the basis of time ratio. These things are given in question. Assume that what I'm writing in rough figures, no, they have clearly mentioned in the question. So time ratio they have given 1:1. Got it? So 1:1 means for pre-incorporation 1 and post-incorporation 1. So 60,000 into 1/2, which means 30,000. So this value what we got. So revenue will be A minus B. Sorry, instead of revenue, let's write gross profit. $40,000, 30 and 10. Got it? So what if the company is earning profit, means pre-incorporation profit will be transferred to only pre-incorporation. Got it? So pre-incorporation profit will transfer to goodwill. When in case of profit, if there is a loss in pre-incorporation, this amount will be transferred to capital loss or capital reserve. Okay, got it? This is how the calculation works. They will give you a trial balance or statement with certain revenues and the certain expenditures. We are going to identify the basis of apportionment based on the given information. Then we will solve the problem by using this format. After calculating, we are going to identify whether the company is going to earn profit or loss. Pre-incorporation profit are going to be transferred to goodwill account. In case of loss, it will be transferred to capital reserve. So this is how it works. Okay, in next video I'll start with the problems. I hope I'll start with very simple and easy problems, calculating time ratios and sales ratios. in one video itself I'll solve both time and sales ratio. Then we'll move on to long questions where we are going to solve a long problem. We are going to start preparing statements. Okay, hope you all understood this video. If you have any doubts, comment in the comment section, and if you like my teaching, like, share and subscribe to my channel.